You might think of Amplifon as just a hearing aid retailer, but right now its share price is unusually low, and insightfulvalue.com has its eye on whether that drop could be a real opportunity. Just as a reminder, this review is for informational and educational purposes only, not financial advice. Amplifon S.p.A. is a global leader in hearing care, operating in more than 20 countries. They distribute hearing aids, run retail stores, offer hearing tests, and provide customer care. In 2024, they reported consolidated revenues of €2,409,200,000, up 7% at constant exchange rates, driven by both organic growth, plus 3.4%, and acquisitions. Their recurring EBITDA reached €567.7 million, with a margin of 23.6%. From a value analysis perspective, Amplifon is investing aggressively. In 2024, they spent €145 million in capital expenditures and acquired about 400 new points of sale around the world. They generated strong free cash flow too, €175.9 million, while keeping leverage moderate. Net financial debt of around €962 million at the end of 2024. On the shareholder side, they propose a dividend of €0.29 per share, similar to 2023. Recently, though, profitability has come under pressure. In H1 2025, revenues grew only modestly, about plus 1.6% at constant exchange rates. Adjusted EBITDA fell to €287.6 million, and margin dropped to 24.4%. Their free cash flow also weakened, and net debt rose to about €1,109 million by mid-2025. What's Amplifon doing in response? They've launched the Fit for Growth program, aiming to boost adjusted EBITDA margin by 150 to 200 basis points by 2027 by closing underperforming clinics, improving back-office efficiency, and focusing investments on the highest return areas. But there are real risks. The macroeconomic environment is uncertain. Consumer demand is soft in key markets. Currency headwinds are hurting, and debt is rising. In Q3 2025, adjusted net profit fell sharply year-on-year to €19.2 million. Why might someone consider investing now? Because if Fit for Growth works, Amplifon could turn its earnings around, leverage its global retail footprint, and benefit from long-term demographic tailwinds in hearing care. But why not invest? If the turnaround fails or debts weigh too much, the current weakness might deepen. In short, there's a potential rebound story, but also a big execution risk. For a deeper dive, including valuation cases, long-term cash flow models, and risk scenarios, check out insightfulvalue.com, where we break down the numbers into clear, actionable insights without the finance jargon. If this video was helpful, please like, subscribe, and drop a comment. Do you think Amplifon is a beaten-down long-term play or a turnaround that's too risky? Thanks for watching. And don't forget to head over to insightfulvalue.com for more undervalued company analysis.